Hello and welcome to another update on gold. We want to take a look at the gold chart now that it's weekend, the market is closed, and I want to prepare you for the new trading week. By the way, if you're interested in more regular gold updates, silver updates, we're now covering them as part of our stocks membership as well. You can find the link in the video description. It's also pinned in the comment section. Now, the situation to me, I mean, it's not super clear on the nano level, really, but the idea is still that gold has topped here on the 22nd of April in a third wave. I mean, I've been quite clear about that. That situation has not changed. Therefore, my assumption is that the pressure is downward. But there are a couple of ways how this move in this fourth wave, which has been unfolding now since the 22nd of April, how this could be unfolding. Now, in the white scenario, that would be the nice and easy pathway. We're tracking an initial A wave down, which might have bottomed on the 1st of May. Then a B wave rally to the upside that topped on the 6th of May as an AB, and then the C wave down could take us now towards that blue box. Yeah, this is the Fibonacci extension zone. How do we measure that? How do we define that? It's defined based on the length of the A wave. Then we compare that with the length of the C wave, because a C wave and an A wave, as per Elliott wave guidelines, these often have the same length. So quite similar there. Therefore, we're tracking a potential target at $3,141. $3,151, yeah? Or lower. I mean, that's the 100% extension. A C wave can be a bit longer than the A wave. So 3,085, 3,045, and 2,981 would be the next targets to the downside if we really get that follow through to the downside in the following week. And I will tell you now which levels now need to be broken to make that more likely, or actually to give us some confirmation that this third wave there in the C wave to the downside has started. So let's zoom in a little bit. If in the white count, yeah, we can assume that a B wave has topped, then this low that formed on Friday was a wave one. Because we can consider it, even though it's a very ugly move, but we can consider it a leading diagonal in wave one to the downside. The rally has reacted to resistance, so it could be a wave two. Okay, we talk about that in a minute, but could be a wave two. And then if we break below the Friday low, that's going to be an important level for next week, that swing low. If we break below that at 3,280, it would confirm further that a third wave down is unfolding. Then we can get a 4 and a 5. So this C wave is usually a 5-wave move, so that's what we're watching for. Now, in the very short term, I mean, the microstructures, a bit unclear, as I said, but we have reached that resistance area. Now, it's not clearly a 3-wave move already, so it's a bit tricky, that nanostructure. I think we can make a case for maybe even 5 waves up in A. Maybe we get a B wave pullback and then a C wave rally. I would at least be watching for that. Micro support is defined here between 3,295 and 3,324. So this would be the nearest, let's say, support zone. Okay. Now, that being said, the move down also looks a bit like 5 waves. So, but that is now a wave degree that's really small. So I think next week, the first support zone I just mentioned needs to be watched. If we can get some kind of an impulsive rally out of this support zone, it could be the wave C of 2 to drive the wave 2 a bit higher. But overall pressure remains downward. So I'm very open to the idea that we could form a top in this wave 2 at any point, but if we look at the extent of the wave 1, ideally the wave 2 could stretch a little higher. So we'll keep the door open for higher in the very short term as long as the market holds above 3,294. Now, that takes us to the yellow count, which is, you could say short-term bullish, but it's the same scenario, so that we are now still dealing with this fourth wave. The only difference is that the B wave is still extending. So it's the same scenario. I don't even see that as completely different. It's just a different variation of the same scenario. Also here, while the market could go a little higher in the very short term, it should then form a B wave top a little later, obviously, as the one that is assumed in the white count, before we go down lower in the C wave. So it would just be an extension of the sideways range movement before we really go lower. That means quite clear about that the third wave likely topped. We're currently working on a fourth wave. The nanostructures might take the price a little higher in the short term, as long as we're holding above 3,294. So again, I'm just not convinced. Yeah, just not convinced that this rally from the Friday low is finished. That is topped. So therefore, these should give you all the key levels to watch for next week, and then it could just take the price higher into resistance. So yeah, that's the update on gold. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in additional updates, make sure to check out our stocks membership. We cover not only the Nasdaq, the S&P, ES futures, and some stocks. No, we cover also the gold and silver charts. Thank you very much. Bye bye.